Welcome in this video. Will Zbcn coin increase 10x? We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
Analyzing price movements within the framework of technical analysis is crucial for investors and traders to better anticipate potential future price directions. At this point, the breakout of specific peak levels can provide significant insights into the direction and momentum of the market structure. Looking at the current chart formation, it is observed that the price is approaching a previously tested peak level, and if this level is retested, a significant breakout may occur. In technical analysis, such peak lines often act as resistance zones, and if these zones are breached, it is believed that the major technical barriers ahead of the price have largely been removed. This could indicate that a new price discovery zone has been entered and pave the way for the price to reach all-time highs. In the eyes of investors and market participants, breaking such resistance levels often creates psychological relief. These levels are areas where selling pressure intensified in the past and where buyers previously failed to break through. However, if the price decisively breaks above this level, it is generally considered a strong signal that the trend will continue with strength. This creates a very positive outlook for investors. Breaking this peak level also shows that buying appetite and momentum in the market have strengthened again. For assets that come under the radar of large investors and institutional buyers, such breakouts could signal the beginning of significant capital inflows. This is because many technical and algorithmic systems interpret the breaking of previous highs as a positive signal. Moreover, the breakout of such peak levels not only results in upward price movement, but also brings about a significant shift in market psychology. Investors who previously took profits or stopped out at these levels may re-enter the market as the price surpasses this point. This leads to increased demand in the market and can initiate a new upward wave that pushes the price even higher. At this stage, the strength of the price movement, volume support, and momentum alignment come into play. If all three factors support the upward move, then a steady climb toward new highs becomes much more likely. However, another important point to note here is that the breakout must be confirmed not only by a wick, but also by a close. If the price briefly exceeds this peak line and then retreats, it could be a fake breakout. Therefore, it is crucial for investors to monitor daily or weekly closes and analyze whether the breakout is supported by volume. A genuine breakout is confirmed not just by the price moving upward, but also by being backed with high trading volume. Otherwise, the breakout may be temporary and the price could revert to previous levels. On the other hand, if this peak line is broken and the price begins to hold above it, investors who previously hesitated to buy may also enter the market. Institutional investors in particular prefer to buy above technically strong levels, so this breakout could lead to new fund inflows. This in turn can cause the price to move more aggressively to the upside. Additionally, the news of such breakouts often spreads across social media, news platforms, and the crypto community, triggering FOMO, or fear of missing out, and prompting retail investors to act more quickly. This can help the price reach targets faster. Following a breakout of the peak line, a retest move is typically expected. During this move, the price pulls back to the broken resistance level and finds support there. After confirming this support, the price may continue upward. This is known as a resistance-turn-support move and is considered a reliable structure in technical analysis. It also offers a second entry opportunity and supports a stable upward price progression. Additionally, this pullback after the breakout demonstrates a healthy market structure and shows that the price is rising steadily rather than impulsively. For all these reasons, if the price breaks above this peak line in the current setup, it could signal not only a short-term rally, but also the beginning of a long-term bull run. This gives investors strong confidence both technically and psychologically. However, as with any scenario, risk management should not be neglected, and potential pullbacks should be anticipated. Since volatility or a correction may follow any breakout, it's essential to closely monitor price action, follow technical indicators, and consider market sentiment. In conclusion, a breakout above this key peak line is viewed as a highly positive development in technical analysis. These types of breakouts often precede new highs and increase the potential for the price to reach all-time highs. If the breakout is supported by strong volume, followed by a successful retest, and there is a bullish consensus in the market, then it would not be wrong to say that a new upward wave has begun. This allows investors to take advantage of both short-term opportunities and the strength of the long-term trend to establish more solid positions. especially if the overall market sentiment is optimistic and macro conditions support this upward move. The likelihood of continued price appreciation becomes significantly higher. But of course, we can't make a decision based on this alone. Let's take a look at other metrics too. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus. And if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
According to Elliott wave theory, price formations that move within a specific cycle provide investors with insights into market direction and allow for the development of projections regarding future price movements. In this context, the current structure observed in the market shows strong signs that the third impulse wave has begun. This particular wave is generally the phase with the strongest momentum and the stage where the majority of investors enter the market. From a technical analysis perspective, this phase typically features the most decisive and high-volume rallies, often accompanied by parabolic price increases. Therefore, the start of the third wave could mark the beginning of a major price movement with significant potential. The third wave is the most impressive phase within Elliott's framework because, by this point, the market has usually completed its prior corrections and investor confidence begins to return. Following the structure formed by the first and second waves, the emergence of the third wave typically results in notable acceleration in prices. This momentum reflects not only a shift in technical indicators, but also a significant change in market psychology. Confidence returns, and those who exited during the correction phase start buying again. This, in turn, accelerates the uptrend. The third wave is usually more dominant and distinct than the other waves in terms of both length and duration. The structural momentum offered by the market at this point signals the possibility of reaching substantial technical targets. When measured using Fibonacci levels, this wave is expected to extend to the 1.618 level. However, during strong bull markets, it can sometimes reach 2.618 or even 4.236 levels. In such expansion scenarios, the price multiplies significantly, offering investors major profit opportunities. For the third wave to develop in a healthy and strong manner, one of the most critical conditions is that the market overall trends positively. Especially when global macroeconomic developments are favorable, investor confidence grows, and risk appetite increases, these large-scale technical formations can be successfully completed. The market is shaped not only by technical indicators, but also by factors such as news flow, investor behavior, and liquidity abundance. Thus, the third wave's potential to deliver a 10x increase is directly related to these elements. On the other hand, for the third wave to produce such a strong rally, an increase in volume is also essential. Volume indicates how much investors support this rally and how much participation the market shows in the upward move. If volume increases alongside price, this suggests that the third wave is progressing in a healthy manner. If volume remains low, the sustainability of the uptrend may be questioned. Therefore, alongside price direction, trading volume should be monitored closely. It should be remembered that the third wave is typically the period when investors realize the most gains. By this stage, much of the market uncertainty has faded and price movements become more predictable. This makes the phase attractive for both short-term traders and long-term investors. However, the minor waves within the third wave should also be considered, and investment decisions should be made in a planned manner, not driven by sudden excitement. In conclusion, if the third wave scenario is valid, significant price increases are technically possible. Of course, this potential alone is not sufficient. Market conditions, investor interest, liquidity status, and global economic indicators must also support the rally. When these conditions are met, the third phase of Elliott wave theory can offer golden opportunities for investors. Capitalizing on these opportunities depends on patience, knowledge, and strategies grounded in technical analysis. It must be remembered that the current impulse wave reflects a wave of renewed confidence following the previous correction phase. Therefore, the signals presented by the market should be monitored carefully, and investment decisions should be shaped in light of this information. For an asset to maintain its long-term uptrend, it needs to move in alignment with certain technical indicators, and one of the most important among them is the 200 EMA, or the 200-day exponential moving average. This level is frequently used by investors and analysts as a reference point to understand the direction of the long-term trend. Especially in highly volatile markets like the cryptocurrency space, price action that remains above the 200 EMA boosts investor confidence and supports the strengthening of bullish strategies. Trading above the 200 EMA indicates that the market holds generally positive expectations and that prices have upward potential. If an asset's price manages to break above the 200 EMA level and sustain above it, the trend is technically seen as likely to continue upward. This represents a structure in which buyers have taken control, market sentiment has turned positive, and investors are now targeting higher levels. As a result, the 200 EMA starts acting as a dynamic support. Each time the price approaches this level, it is seen as a buying opportunity, and the price tends to bounce upward. Therefore, maintaining price action above the 200 EMA is critical for the continuation of a bullish trend and for prices to keep targeting higher levels. There are numerous past examples showing that when price was below the 200 EMA, it was weak, under pressure, and in a downtrend. But once this level was broken, buying momentum accelerated and uptrends began. This highlights the importance of trend following, one of the core principles of technical analysis. The 200 EMA is, in a sense, a reflection of the market's overall health. If the price is trading above this level, the general outlook is considered healthy, strong, and positive. This leads investors to increase long-term positions, raises risk appetite, and fosters greater market confidence. It is also known that the 200 EMA is tracked by large funds, institutional investors, and algorithmic systems. These major players assign significant importance to this level because it is a powerful signal for determining the market's direction. Therefore, when price moves above the 200 EMA, not only retail investors but also big capital holders tend to increase their positions. This boosts buying power and allows price to rise more steadily. In such scenarios, attempts to reach new highs, break previous peaks, and even move toward all-time highs become much more likely. For long-term investors in particular, maintaining price action above the 200 EMA is a very critical parameter. This level is not only important for short-term momentum, but also forms the foundation of structural bull markets. If the price stays above the 200 EMA, investors interpret this as a sign of trend strength and tend to hold their positions longer. This also increases market liquidity, as expectations of continued upward movement drive more buy orders and improve trading volume. In the end, the price gains a stronger technical foundation. Additionally, price action above the 200 EMA creates a psychological sense of security for investors. Market participants tend to interpret dips as corrections and see them as buying opportunities. This encourages investors who are considering selling to hold on to their positions and attracts new investors into the market. This psychological cycle becomes the fuel of a bull market. The uncertainty, fear, and lack of confidence that were prevalent when the price was below the 200 EMA are replaced with optimism, confidence, and courage once it rises above it. Still, one of the most important points to consider is the need for price to show sustained action above this level. It's not just about briefly breaking above it, but also seeing daily or weekly candle closings and volume support above the 200 EMA. Otherwise, such moves may mislead investors and result in what's known as a fake-out. Therefore, investors should not only focus on the breakout, but also monitor whether the level holds a support and is retested successfully. A pullback to the 200 EMA, followed by a bounce without breaking below, is a very positive scenario. This type of move confirms the retest concept in technical analysis. When the 200 EMA, initially acting as resistance, is broken and then retested as support, it becomes a strong foundation. The upward movement following this retest gives investors the impression of a solid and reliable uptrend. This paves the way for the price to reach even higher levels in the future. Each strong move above the 200 EMA with volume indicates strengthening momentum and growing dominance of buyers in the market. In such scenarios, price is expected to move not only toward short-term targets, but also toward medium and long-term resistance levels. Especially in historical periods when price remained above the 200 EMA, strong rally movements occurred, which further boosted investor confidence in this level. Therefore, historical data also shows that prices maintaining above the 200 EMA tend to enter much more prolonged and powerful uptrends. For all these reasons, one of the first indicators investors should closely monitor when aiming for consistent price increases and new highs is the 200 EMA. This level is not only technically important, but also psychologically defines the market's direction. As long as price remains below the 200 EMA, it continues to be under pressure and upward moves remain limited. But if price breaks above, holds, and uses it as support, then the market enters a much stronger phase. In conclusion, for prices to rise steadily over the long term, aim for new highs, and experience major rallies, staying above the 200 EMA is almost a necessity. This ensures the sustainability of buying power from both a technical and psychological perspective. The 200 EMA is not just a moving average line, it's a barometer of market sentiment. Therefore, price action above the 200 EMA can be a strong signal of a major bull market, and investors should not ignore such powerful technical indicators. As long as the price sustains above this level, market participants will continue to anticipate higher levels with optimism, and the upward potential will continue to strengthen. The 200 EMA reflects long-term trends.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.